Anyway, what are you gonna do? Now we can go look at futures. Futures are actually holding up pretty well too here. Dixie? And Dixie's moving up. What the f? Just trying to claw it back against everything. Anyway, roll credits. Let's get the weekend started. Well, I'm gonna see you guys all on Sunday at 12:30 p.m. for the members only stream. I guess we'll see how options positioning looks Monday. Right now, I would say things look pretty bearish. We're just barely above like the longer trend VWAP on futures. We failed the upside test today and closed below delta neutral. Accumulation of short positions. I mean, there's still a lot of Vega risk at, well, now again at 4,400 because they decided to try to pump off of it. But 43.75, 50, and 4,300. Over the weekend, I can't see the news of today shaking out positively. Nvidia shit the bed on earnings. The whole week was kind of just not bullish, right? None of the data came in positive. There's nothing really impactful next week till like Tuesday, Wednesday. I think we get jolts on Wednesday, right? If PCE's up, that's just gonna mean, the Fed's probably gonna raise rates, and then core and PPI are probably both gonna be up because oil prices. Oil's back at 80 on futures again. I don't know if that's quite bottomed out yet, but it might be getting kind of close to it. Treasury futures or T-bond futures closed up today, which is surprising. They were down through most of the pump, but it looks like yields kind of blew out on the 2 and the 5 going into close, even though the 10, 20, and 30 contracted a bunch. Dixie's at 104 going into the weekend. Yen's at 146.36. So we'll probably see those move higher into next week. I don't know what Lagarde said, but the euro's down since she opened her trap, so I'd imagine nothing positive about the euro. And I guess that's about it. So yeah, next week we're gonna be very focused on like fast gamma, which is now moved back up in the early part of the week, and then that's roughly somewhere around there. I think it's a little lower. It's like here. So yeah, this is going to be still our bullish range. Probably between 43.80, 43.80 and delta neutral is going to be kind of our mid-range, and then below 43.80 is going to be bearish. We do have a head and shoulders here, and this candle, I mean, on the 1 hour almost confirms it. I don't want to see another drop, but if we break this lower trend again, that's I mean, from a technical standpoint, that's really bearish, right? I mean, it's like a 1 hour head and shoulders on an ascending trend, which is, if that fails, oh boy. So yeah, I guess we'll see how things shake out over the weekend. But I can't really think of anything bullish that occurred at this point. So I don't see any reason for the longer dated put positioning to give up. And we already know that the bull side has been weakening progressively over the last couple weeks. So surely no more bearish news could come out this weekend, right? I mean, no bullish news has come out for like 3-4 weeks now. Knees and toes time at the JPM long puts. If we hit the JPM long puts, I'm gonna orgasm right here on stream in front of everybody. Anyway, I'll see you guys all Sunday. Same time, same like tantric. Tips, GME tips, still contracting a little bit. I'm wondering if the reduced liquidity here on a market turnaround could give us like a slow grind up the way we got back here into earnings. Or like Jan. These are super shitty though. And profiting off of them sucks because you have to buy overpriced at the money calls. But I mean, we're trending down. Liquidity is tightening. Borrow rate's probably going to start going up if we move much lower, and stay in this price range. So yeah, I mean, they're going to have to start digging for liquidity to the upside, but it may not be quick, right? Like it may not be like an OPEX because, well, we didn't have a fucking OPEX run, right? And so, earnings is out on 6.9. Yeah, we might see a slow climb or stagnate into earnings, and then they cover at earnings and try to short back into the morning session. You know, the old favorite. But that's kind of where GME is right now. So yeah, you could go long at it on it, but I wouldn't go very far out of the money, and I'd definitely want to have enough theta to carry through September OPEX in case earnings just serves to provide them with extra liquidity. Right? So if people sell or institutions sell at earnings and liquidity moves back up, this won't blow off until September when the ETFs rebalance. So keep that in mind, I guess. There might be some ETF FTDs, but I'll check with Carl. If those are happening, those are going to be through from next Friday through the following Wednesday, which is like September. That's going to be before earnings, right? So September like 5th, 6th should be where they're highest. I don't have the charts right now, but yeah, if like 4, 5, and 6 for September for ETF FTDs. I'll check out what the numbers are. They're probably not phenomenal. Um and they were pretty good last time, and we still didn't get anything out of them. So although we're liquid enough now that maybe we will. That's it. Time for synthetic long on GME. Check the skew. If you can't get decent leverage off it, it's not worth it. No, September 15's too little. You have to go out beyond that. You probably need like whatever the end of September contract is at a minimum. And that's risky if you have to hold it. And was that like the 29th? That's risky if you have to hold it into OPEX. But there's ways to offset your theta decay, so you guys can figure that out. All right, thank you guys for tuning in. I'll see you on Sunday. Have a great weekend, everybody. Later.